Until August, we only had 25 producing wells. We've now got 136. So the type of work, Steve, is going to be exactly the same, but the scalability and size and scope of it is going to be much, much larger.
All right, welcome back inside our proactive newsroom. And joining me now is Mark Vanry. He's the CEO of Wedgemont Resources. And Mark, it's great to see you again. How are you?
Not bad, Steve. How are you doing?
I'm doing very well. Thanks very much. And the company out with the news release, kind of highlighting a lot of things that have happened in 2024 and really looking ahead to 2025. So let's start off with West Central Texas first and your oil and gas assets there. Tell me a little bit about what's going on there.
Yeah, well, in August of this year, we made our largest acquisition to date, the Huggy acquisition, which more than quadrupled the size of our company. So most of our efforts since the closing of that deal have been focused on optimizing those assets, doing compliance work in those assets, and getting everything that we need to be set up in order to sell oil from those new leases. So the press release initially that we put out earlier this week talked about Huggy. So the key milestones that we've done at Huggy to date since we picked it up, we've completed the compliance work, which is absolutely key. That's all the surface facilities, flow lines, cleaning up old wells, you name it, turning on wells, turning on compressors. So it's not the sexiest type of stuff, but it's absolutely key. Once we completed that last week, we got the sign off from the Texas Railroad Commission, who oversees the entire industry in Texas. They're the governing body of the industry in Texas. And they give us sign off so we can now start selling oil from those leases. So that's obviously key for us that we're able to now sell oil from the leases. The program going forward through the balance of this year and through 2025 at Huggy will be to start optimizing the wells. Exactly what we did with our legacy assets at Willowbend, Milliken, and TCS. We'll be doing chemical stimulation treatments and well workovers to optimize the production from there. So we've got a ton on our plate. It's going to keep us extremely busy through 2025. And we're excited at the possibility of ramping up those wells just like we did on our initial 3 acquisitions last year.
Yeah, let's talk about Davis because you one of the key milestones was to get the optimization working there, and it seems like you've been able to produce that.
Yeah, we're really excited about Davis. I've been talking to investors kind of on one-on-ones and when I've been doing some roadshows about the Davis leases. So the important thing about Davis is not only how well the wells have performed for us and how well they've responded to the chemical treatments, but it's the longevity of how long now those wells have ramped up productions and the sustainability of that. I think when we came out and made some promises when we did the initial acquisition, we talked about the Davis wells. We talked about our plan to do chemical optimizations and workovers and that the production would ramp up. And a lot of the questions we got, because the type of chemical treatments we use are fairly new and they're proprietary and haven't been done in this area that much, is how sustainable. They said it's great that you can ramp up production, but how sustainable it is. Well, the Davis leases are the first on this, right? The Davis lease has 2 producing vertical wells, and those are the first 2 that we completed treatments on over a year ago. And the beauty for us, or the excitement for us, is that we've seen almost a 10x increase in production since we started that on those wells. And just as important as that increase in production, it's been sustainable now over, I think I talked in the press release about the last quarter, but we've been just ramping up over the past year with those leases. So we're optimistic that we can replicate that across the asset base. So that's absolutely huge for us because a lot of people think, oh, wells, you'll chemically stimulate, they'll come on very hard and then start to decline. What we've demonstrated is after that big increase in production, they're sustainable at higher levels. So
Okay.
that's the plan for us really across all the assets. Technically, our challenges are similar across the entire asset base, and we just plan to replicate what we did at Davis.
Yeah, so does it, looking on ahead to 2025 now, does it look more like what we've seen in 2024 then? Is that sort of what we should take from a lot of what was in this news release is you'll see next year pretty well what you saw this year?
Well, I'd be disappointed if we weren't able to ramp up far more significantly than we did this year. This year,
Okay.
We had 20 until August, we only had 25 producing wells. We've now got 136.
Mm.
So the type of work, Steve, is going to be exactly the same, but the scalability and size and scope of it is going to be much, much larger. So we're hoping that we can exit the year as a much larger and stronger company, and obviously far more robust cash flows, and be just being a bigger company to get on more radar screens as well as from the investor side.
Absolutely. Mark, thanks so much. Great update. Good to see you as well. And best of the season. We look forward to more conversations in 2025. Okay.
Yeah, thanks, Steve. Merry Christmas and best wishes for the new year.
Yeah, you as well. There's Mark Van Rees, the CEO of Wedgemont Resources.